Hey traders, Akil here, and welcome back to another episode of the Forex Market Preview. I hope you guys are enjoying your weekend so far, and if you're anything like me, then, well, it just got a little bit better knowing that the latest edition of the FMP is out. Now, in this week's video, we are going to follow up on a few pairs that we looked at last week, and we're also going to do something that I typically never do, and that is critique another trader's trade. But let's start off by looking at the pound dollar. If you guys remember last week, we looked at this pair and we projected a potential 26.18 opportunity. And well, if you go back to the 4-hour chart, it is exactly what happened. Price action put in our double top right here. You can see if I take my Fibonacci extension tool, or excuse me, my Fibonacci retracement tool, and drag it from my swing high to my swing low right down here, you will see that price came right back to our 618. We consolidated there for a little bit, and then we came down to crush target ones at a retest of previous structure lows. And now we've put in a lower low, lower close. Now, if you didn't get a chance to see last week's video, I recommend going back, pausing this tape, and going back and watching it first. But you'll remember that the next level that we were looking for price action to come to was a 50% retracement from our swing low right here to our swing high. So it was right around the 128 even hand, a little bit above $1.28. And you'll see that, let me just go ahead and isolate this for you guys so we're not too cluttery on the charts. You'll see that our 50% comes right in here, look left, structure leaves clues. And if we also take our Fibonacci extension tool and drag it from our second test here, our swing high to swing low, we're going to get a little bit of Fibonacci confluence as well. You can see a 1618 Fibonacci extension here in green lining up at that same level. So just confirming a little bit that that is indeed a level that I want to look for price to go to. So what am I looking for this week? Well, if we drop one more time frame down to the lower, to the hourly time frame, and let's just delete all this again, you'll see that price action is putting in a flag formation, right? We recently had an impulse leg, swing high to swing low right here, and now we're starting to consolidate a little bit. And it's no surprise we're doing this. Friday was Jobs Friday, excuse me. That's when we have our non-farm employment change, our unemployment rate, our average hourly earnings, and some other events coming out as well. And typically the markets do a little bit of a dance and then they just go silent for the remainder of the day as no one really wants to make any last minute decisions before the weekend. But this particular formation, a flag formation, when it's pointing in this direction, meaning when the flagpole is pointing downwards, what we're likely to see is a continuation. So the price action puts in a high momentum move, we kind of consolidate for a little bit, and then we followed it up with another high momentum move lower. So what I'll be looking for this week in the live trading room and in the syndicate program as well is a move up to this level right in here. You can see that price action push down, right? We started to consolidate a little bit right here with a nice doji candle, that green candle in the middle. That's called a doji candle. It's an indecision candle, meaning the market tried to push higher, the market tried to push lower, and eventually it just kind of it closed basically where it started at, or very close to. And then you can see the market tried to make a retracement up, and that got rejected, and the sellers remained in control. This level, right, with no surprise, comes in at our previous structure lows. And now that we have a lower low, lower close, I'm looking for price action to move back up into this area, and I'll be looking for a short opportunity to trade this down to that $1.28 level that we talked about earlier. Now, dollar Canada was another pair that we talked about in last week's video, and it was basically doing the same thing. What we were looking at on dollar Canada was we had run into some consolidation, and we were looking for a continuation lower. Let's actually go to 4-hour charts a little bit clearer. We had ran down into consolidation here, right? And we were looking for a continuation lower. Now, I never had a chance to hop on this move lower. I'll show you what I'm looking for. It's very similar to the pound dollar. I'll show you what I'm looking for in a little bit. But we were able to catch some pretty nice moves inside this consolidation, because consolidation, right, that choppy movement that often looks disgusting and yucky, right? My kid's been going around saying yucky for the last few days, so that word is stuck in my brain. It often breeds opportunities for advanced pattern formation traders. And you'll see if we zoom down to the hourly chart, right? Inside this level, inside this consolidation, we actually had 2 and very close to 3 advanced pattern formations. We had a bearish bat formation looking like this to start our week, X to A to B, B to C, and a CD completion right here. You can see an easy 2 target winner, and that rolled down right into, just hold on a second, there we go. That rolled down right into a bullish bat formation, giving us an X to A to B. Let me just go ahead and change the color so it's not too confusing. X to A to B, B to C, and a CD completion down here that also ran up for 2 targets. So in this consolidation, there were 2 advanced pattern formations, both rolled over for multiple targets, target 1 and target 2, and it made a lot of our traders very, very, very happy during the week. Now, we almost had a cipher formation here as well. Many of you are probably saying that, isn't that a cipher? It's not, but we almost had one looking at X to A to B, B to C, C to D. Our C leg was slightly invalidated, but that would have put in a perfect move. Probably wouldn't have traded it anyway because of the non-farms. But if you're a trader that's not worried about that event, would have put in a perfect move to continuation or to continue downward as well. Now, that was the past. So what am I looking at now? Well, same thing as pound dollar. Similar thing as pound dollar. You can see once again price action spiked down, a very impulsive move here. We had our non-farms, which we saw a bearish dollar reaction. We also had some very positive news for Canada come out as well. I don't remember exactly what the news was. Let me just check my deal real quick. I don't think it was GDP. What was it for Canada? Employment change and so jobs news for Canada as well that came out very, extremely positive. And the overall bias has been in bullish Canada anyway. Now that the government says, or the governor has said that the interest rate cuts have worked and whatnot, it's time to get the ball rolling. Doesn't really matter. But back to the charts, we're looking at a very similar thing here, where we see price action, right, spike down off of this move. We see some buyers, some buying pressure, try to take control right here with this nice pin bar. We see a push up. And then that rally is very short-lived, and we see a continuation down here. So just like pound dollar, what I'll be looking for is a move back up into this area, right? And we already had a first move up there. Maybe we'll get a complex pullback, but a move back up into this area and a chance to get short for a continuation down, because I still think we can go down to about $1.25 here on the dollar Canada. And again, you can go back and just watch last week's video. We talk about the bigger picture and whatnot. Now, I want to do something that I don't often do, and that is critique a trader's chart. And again, I don't really do this for a few reasons. It's not fair to the clients that I work with. You guys can imagine all of the requests I get each day of every time a trader has a trade on their radar. Hey, Akil, should I take it? Should I not take it? What should I do? Does it look good to you? It's not fair to the clients that pay a cost to be involved in our programs, the transformation clients, that is, for me to just go around critiquing every single trader's charts. It's also something that I don't want to do because I would never have time to focus on my own trading. So I don't make the habit of doing that. But also, if you know my philosophy on trading, guys, I'm not one of those educators. I'm not one of those traders that thinks that, hey, the way I trade has to be the only way to trade. I believe that there are many ways you can trade. That's been proven by just all the different systems and strategies and techniques that are out there. I believe that there are many ways to be profitable in the market. And I believe that as long as you've done your due diligence, as long as you've worked and tested your plan and it is proven to have a positive expectancy and you can be consistently profitable with it, then that's fine. Who am I to say if I disagree, who am I to say that it's a bad trade or a good trade or whatnot? And unless I really know a trader's rules, again, I can't really tell them that they're wrong. But this particular example stood out to me because I think it brings over a valuable lesson. And just give me a second to go and find the message that this trader sent to me. All right, so the trader said, Akil, when I was doing my analysis, I thought oil would rise to the bluish zone as marked on the picture. However, it started falling even below the 382 Fibonacci retracement, which confirmed that the market is no more bullish, but bearish. On your videos, may you please cover a lesson on this? And I went ahead to ask the trader, let me ask you a question. How come you thought it would rise? And that's a question I like to ask traders whenever we get into talking about charts, really because I want to see if the trader actually has a plan. Now, by the response, of course. If a trader has a plan, a trading plan, meaning rules of engagement for why they're entering the trade, it should be a pretty detailed answer using that if-then syntax. Well, Akil, because the market did this, that's why I did this. I waited for that, and then I did this, and blah, blah, blah. A pretty, again, easily drawn out basically letter of direction for why they got involved in the trade. If a trader responds and says, well, I thought, well, I feel, well, it looked, I heard, stuff like that, then that usually tells me that the trader either has zero trading plan, zero reasons for entering the trade other than just emotions, or that maybe they have an idea, but they don't quite have rules in place yet. So I asked this trader, what made you think that oil would rise? And he said, on the daily chart, the RSI was oversold. So after looking left, I saw the area where I drew the blue box, which was support / resistance. And then I measured the previous legs up and projected a new structure I anticipated. So essentially what the trader is doing, if you see the most recent retracement, the trader copied and pasted that retracement and projected an equal measured move for the retracement of this pair. Now, there are two things we want to be concerned about. First, we have to understand, first and foremost, that, guys, please understand that the RSI being overbought or oversold doesn't mean that the market will reverse. That's a very interesting discussion we had on Twitter the other day, and I was surprised by how many traders actually thought that it's a buying and selling signal. Please do your homework on the RSI, and you'll realize that the indicator does not tell you that. But more importantly, the trader mentioned in the question, he said, well, it started falling even below the 382, which confirmed the market was no more bullish, but bearish. And here's the thing, price action on this move down was never bullish. It's important that before we get involved in a trade that we know what type of trade we're getting involved in, that we know what the market is doing. That was a big problem for me as I went through my trading journey. When I went through my training course, I fell in love with the first strategy, the simplest strategy that I was taught. It was called the Fibonacci failure strategy. And essentially it was a trend trading technique. And I traded it for a while, and eventually I stunk and bounced to another system. But what was a big red flag for me when trading that system was that I was supposed to be a trend trader, yet I couldn't identify if or what direction the market was trending in. And if you guys feel like you're the same, I hope you can see the importance. If you're going to be a trend trading trader, you should know which way the market is trending. Therefore, you can get involved on that side of the market. But I know many of you have never taken the time to do that. And if you haven't, here's what I want you to do. I want you to head over to our website, www.tradeempowered.com, right? Feel free to shoot us a message if you have any questions. But I want you to watch two videos. I want you to watch The Fundamental Myth here. This is always a good video. It challenges the universally held beliefs about trading and what really separates the 10% of who succeed from the 90% that don't. But I also want you to click over on the Learn to Trade tab and check out our Into the Grade training. So if you don't know how to identify a trend, if the new structure high and new structure low principles, that is going to teach you how to do so. And that's very important no matter what type of trader you are. So the first red flag here of this trader is thinking that we were in a bullish move. We were never in a bullish move. You can see the market has been putting in a series of lower lows and lower highs, meaning that we were in a bearish trend. Now, yes, we did come down to previous structure support looking left, but, right, it still doesn't mean that this is a bullish trending opportunity. It means that we've come to a level of support. We may see a retracement up as price did, but this is still a counter trend trading opportunity. Now, Akil, why is it important to know if this is a counter trend opportunity versus a trend continuation opportunity? Well, it all has to do with targets and stops, right? In a trend trading opportunity, you're going to be a lot more aggressive, or you're going to have you're going to be looking for most likely a further move in a trend trading opportunity because you're going in the direction of the trend. Basically, you're going in the direction that the water is flowing. In a counter trend trading opportunity, you're going against the grain, right? You're going into the wild weather rapids instead of going with them. So the target opportunities that you want to look for should be a lot smaller as you're just looking for a brief retracement. So I think one of the issues, or the main issue that the trader has wrong here, is just target placement. I think the move did what the trader thought it was going to do. I just think they bit off a little bit too much than they can chew as far as target placement goes. Now, with that being said, I don't know anything about this trade. I don't know if the trader was stopped out or anything like that. With that being said, I still don't think, even if you're shooting for the blue box, I still don't think there's any reason to panic. Up to this point, price has done absolutely nothing to say that you're wrong in your prediction, right? We've rallied up from previous structure lows, right? We've put in a little bit of a retracement. No structure was violated. Your stops didn't even come close to being hit, I would assume, unless you're rolling up very aggressively. At this point, there's no need to panic. We can easily put in a complex pullback, another extended move up, and hit your targets. And another issue that many traders run into is they expect instant gratification from a trade. They expect to be right all the time, and they expect to be right away, and that just doesn't happen. Yes, we sometimes have pain-free moves. I showed you 2 examples of that this week, but most of the time the market's going to take you for a wild ride. It's going to make you earn your profits, and when I say it makes you earn your profits, I mean it takes you on an emotional roller coaster ride. It goes up, it puts you in profit, then it goes back down to break even, then it puts you in more profit, and then it takes profit away and puts you in the red, and then it finally rallies up to hit your targets. And it's a very disturbing process. It's a tough process to deal with, but that's how traders win. Traders stick with that. They don't get caught up in the emotional ups and downs, right? They trust their plan. Why? Because they've tested it, right? And they know what they're doing is the optimal way to trade it. And they have belief in themselves. They have beliefs in themselves. They have belief in their plans. And having that belief allows them to take the correct actions. And when you take the correct actions, you often see the correct results. So that's the advice that I would have for this trader. Again, I can't dig too much deeper into it just because I don't know the details of what the trader was doing. But this is a perfect example, guys, of what we do in our Transformation Strategy Lab. Each and every Monday, we hold an hour live session where we go into the markets and we break down trading opportunities like this. Last week, we took a trader who was developing a counter trend trading strategy that was having lots of problems. So we sat in a room for an hour. We went over what the trader was doing. We talked about how to do it in a better way as far as being more efficient with target taking, being more efficient with stop losses, maybe adding a few filters. And we came out with a strategy that the trader can now test and, hopefully one day use to bring himself consistent profitability. And I think that's the main part. That's the main benefit of being involved in our training courses. A lot of people think it's the actual course material. Yes, there's a lot of course material. It's going to take you a long time to go through. We teach you absolutely everything we know about the markets, but that's not the beneficial part. The beneficial part is really being mentored, really being coached, really having that support while you're going through that journey to be able to use the tools that you have and be taught how to use those tools in the right way. I love the toolbox analogy because, I'm someone that's not too handy. So I have a bunch of tools sitting at home, right? But half of them I don't know how to use, which makes them pointless. So all the tools I have, right, most of them are pointless because I don't know how to use them. So it's only the person that has that toolkit, that is taught to use them the right way, that can actually make the most out of having those tools, instead of, either doing nothing or, at worst, being a harm to themselves, which is what we see many traders do. They think they know, but they don't know, and they end up hurting themselves. So I'll see you guys next week. Thank you once again for joining me, Transformation members. I will see you Monday for another strategy lab, since we just talked about it. And until then, plan your trade, trade your plan. I wish you guys a happy rest of your weekend and best of luck in the markets this upcoming week. All right, traders. So I hope you enjoyed today's video. And if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our TradeEmpowered.com website, or also take a look and you'll see more videos available for you. Have a good one.